Good morning, friends. In our last discussion, we just discussed about the need for having the income tax in our country. So we learned that why there is any necessity for having the income tax law in India, and within the income tax law we need to study the various sources of law. That is the Income Tax Act 1961 and your finance bill, then case studies. Then the decision which are given by the various courts, maybe Supreme Court, High Court. Apart from that, we also discussed something about finance bill in little detail. Now, having continued with the same topic, today we'll just try to understand certain terminologies which are being frequently used in Income Tax Act 1961. So the first definition, the first terminology which is quite frequently used in Income Tax Act is the Assessee. Definition of Assessee has been explained under subsection 7 of section 2 of Income Tax Act 1961. If you see, the Assessee means a person by whom any tax or any other sum of money is payable under Income Tax Act, and includes. Before I just take the explanation of it includes, I just want to explain it. I want to make you understand that the assessee does not mean the only person by whom any tax liability is payable. It also includes those persons from whom any sum of money is payable under the Income Tax Act. So if you just want to see what exactly is included in the definition of assessee as explained under subsection 7 of section 2, first of all, it includes every person in respect of whom any proceedings under the Act has been taken for assessment of. It means we need to understand this definition very closely, because this is something which is being frequently used in Income Tax Act, and you should also try to understand the meaning of the assessee in its right spirit, in its right meaning. So every person in respect of whom any proceedings under the Act has been taken for respect of his own income or of the income of any other person for which he is liable, or the loss sustained by him or by such other persons. It means all these possibilities are covered under this particular subparagraph. We'll just continue with it. Now, what are the other persons who are included in the definition of assessee? Means every person who is deemed to be an assessee under any provision of this Act. It means it also covers the deemed assessees. Means the assessees, the persons who would be regarded as a deemed assessees. So it covers this particular aspect also. The last one is that every person who is deemed to be an assessee in default under any provisions of the Act. If any person has committed any default under any of the provisions of the Income Tax Act, then he shall also be deemed to be an assessee in default. We'll just try to understand the definition of assessee by understanding or by taking some of the examples. Say, example number 1. Mr. X, assume that Mr. X is there. Mr. X has earned business profit of rupees 8 lakhs for the assessment year 2007-2008. Means the assessment year 2007 and 8, he has earned a business profit of 8 lakhs. So he has to pay a tax of rupees 1,93,800. That is the tax liability which would arise on account of his earning 8 lakh rupees. So in this case, he will be treated as an assessee because he has to pay the tax. Next example we can take. Second example. Suppose in the above case means in the case of A. Suppose in the above case, Mr. A had an employee and Mr. A has been paying him the salary of rupees 20,000 per month. In this case, naturally when he is paying the salary, he is supposed to deduct the TDS. TDS means tax deducted at source. That is the statutory requirement on the part of the person who is just paying the payment. So, as per the provisions of the law, as per the provisions of the Income Tax Act, he is required, he is supposed to deduct the TDS, but due to ignorance of law, since he was not aware of the fact of this law, he did not deduct the tax at source. So in this particular case, he would be known as assessee in default. That is also covered in our definition of assessee. Third example we just try to highlight is, say Mr. A, he has paid his tax liability properly, but did not file his income tax return. It means whatever tax liability was there, he was required to pay some tax, as we have assessed by virtue of his earning 8 lakh rupees in our previous example. So he has paid his tax liability, but he did not file his income tax return. So in this case also, he shall be liable to pay the penalty. Now he has paid the tax, still he is required to pay the penalty, because by virtue of the provisions of this Income Tax Act, he was required to file the income tax return. So he had to pay the penalty under the provisions of the Income Tax Act, and therefore he shall be known as an assessee. Next example. Now suppose that Mr. A has earned income which is less than 1 lakh rupees for the assessment year 2007 and 2008. He did not file his tax return because he thought he does not come under the tax bracket. His income was 1 lakh rupees, so he did not file the return. The income tax department also did not take any action against him for not filing the return on his part. In this case, he shall not be regarded as assessee. However, he has earned 1 lakh rupees during the assessment year 2007 and 2008. Now, I just want to take another example to make the definition of assessee more clear to you. Assume that a letter of inquiry was issued by the Income Tax Department to Mr. X of Delhi. Means Income Tax Department, they just issued one letter of inquiry to Mr. X. In this said letter, the department did not make a mention about any of the provisions of the Income Tax Act. It means while giving the letter, they did not give any of the provisions of the Income Tax Act under which they were just going to write the letter. Could he, based on this letter, be treated as an assessee under the Income Tax Act 1961? Letter has been received by Mr. X by the Income Tax Department, but the Income Tax Department did not mention any of the provisions of the Act under which they had sent a letter to Mr. X. I can give the answer of this particular inquiry in this fashion, that in the aforesaid case, the Income Tax Department cannot hold him assessee. Why he can't hold him assessee? Because the letter has been only in the form of inquiry, without holding him liable for any provisions of the Income Tax Act 1961. So it cannot be construed as a part of the proceedings under the Income Tax Act 1961. Hence, he cannot be treated as assessee. I think with this 4 examples, the things or the definition of the assessee would be quite clear to you. Now I'll just come to another definition, another terminology which is also very, very important under the provision of Income Tax Act, assessment year. While going through the various provisions of the Act, while going through the various chapters which are included in the Income Tax Act, you will inevitably find that the term assessment year would be used almost in all the chapters. Now, what exactly is the assessment year? We'll just try to find the meaning of assessment year with examples also. First of all, we should be clear what exactly is the assessment year. The assessment year means the period of 12 months. It means it's a period of 12 months which commences on the 1st of April of every year and ends on 31st March of the next year. It means assessment year is a period of 12 months which starts from 1st of April of every year and terminates on 31st March of next year. For example, the assessment year 2007-2008, which is right now going on, shall start from 1st of April 2007 and will end on 31st March 2008. The income of the previous year of an assessee is taxed during the following assessment year at the rates which are prescribed for such assessment year by the relevant Finance Act, which I just made a mention in my last discussion, how the Finance Act gives the rate of tax in various parts. Because there are 4 parts in the schedule, first schedule. which is to the finance bill, and all the rates of tax are given in four parts in that first schedule to the finance bill. So various rates are there, and based on the income of the previous year, the assessee is liable to pay the tax during the following assessment year. Now, another definition is the previous year, because I just want to make you clear that the definition of previous year and assessment year is a very, very important, and again we will just try to explain this assessment year and previous year simultaneously by following some examples. So what is the previous year? Section 3 means in terms of Section 3 of the Income Tax Act 1961, the previous year means the financial year immediately preceding the assessment year. It means it's a year which immediately precedes the assessment year. We will also explain that the year in which the income is earned is the previous year, and the next year when the income is taxable is the assessment year. For example, income earned during the previous year 2007 and 2008 is taxable immediately following the assessment year. So in this case, you have just earned the income in the previous year 2007-2008, and this income shall be subject to tax immediately following the next year, which is called 2008-2009. It means 2008 and 2009 is my assessment year, and 2007 and 2008 is my previous year. So as per the definition, it is also clear that the financial year which immediately precedes assessment year is my previous year. We can explain the concept of this financial year, previous year and this assessment year by understanding some of the examples. If, example number 1, if the previous year is 2002-03, then the assessment year shall be 2003-2004, because next year following the previous year, the next year would be assessment year. If the previous year is, for example, 2006-2007, then the assessment year is 2007-2008. Third example, I can say that if the financial year is 2007-2008, please, here I am using the word financial year. I am not using the word assessment year or the previous year. Here I am using the word the financial year is 2007-2008. Then it can be a previous year as well as the assessment year. This is thing which you should be very clear. I mean that particular concept should be understood by you. So here in this third example, I am using the word financial year 2007 and 2008, which can be construed both as the previous year as well as the assessment year. How? If the previous year is say 2007-2008, if you regard this previous year, this financial year as previous year, then the previous year is 2007-2008. Then accordingly, its assessment year would be 2008-2009. And if the assessment year is 2007 and 2008, then the previous year would be 2006 and 2007. I hope that by understanding these examples, the concept of previous year and assessment year would be crystal clear to you. One thing, please note that from the assessment year 1989-90 onwards, all assessees are required to follow the financial year, means 1st April to March 31st next year. So they all are required to follow the same assessment year as the previous year. This uniform previous year has to be followed for all sources of income. Now we'll just try to understand the previous year for a newly set up business or profession. How does the previous year start for the new business which a person is going to start? In terms of the provisions of Section 3 of the Income Tax Act 1961, please note down, in case of newly set up business or profession, in case of newly set up business or profession, or in case of new source of income coming into existence in any particular financial year, the first financial year, that is the previous year, shall begin from the date of such newly set up business and ends with the end of such financial year. How? We'll just try to understand this particular concept with an example. For example, Mr. Amit starts the business of retail merchandise on 15th October 2007. Recently he started business. In this case, his first previous year will be from 15th of October 2007 to 31st of March 2008. So it means from the day he has started the business, it would be reckoned, the previous would be reckoned from the day of his starting the business. And however, the subsequent previous year will start from 1st of April next year to the 31st March of 2009 and so on. The things can be amply clear if you just try to analyze the second example. Suppose Miss Amrita, she is working in an XYZ Limited and she is getting a salary of rupees 18,000 per month. She also starts a boutique in her home on 15th October 2007. Please note down here she is working in a company as well as she is doing some business from her home and her business is boutique. In this case, she will have two different incomes. The one income would be salary income which she will be getting from her employer, and the second income would be her business income which would be taxed under income from business and profession. So her previous year will be from 15th of October 2007 to 31st of March 2008. That would be the previous year in respect of her business income. However, for the tax purposes, both the income shall be aggregated and tax shall be assessed in the assessment year 2008 and 2009. It means if in this example you see she will be having two previous years. In respect of one previous year, that would be for previous year would be for the salary income and another previous year would be for the business income. However, from the subsequent years, from the subsequent next year, means from next year she will be having only one previous year and it will be followed consistently for the years to come. Now, the next important terminology or definition under the Income Tax Act is the books of accounts, which are given under subsection 12A of section 2. What exactly we mean by the books of accounts under the Income Tax Act 1961? The books of accounts include ledgers, day books, cash books, account books, whether they are kept in written form or as printout of data stored in a floppy disk, tape, or any other form of electromagnetic data storage. So as per the definition, the Act has made it clear that books of accounts need not only be in the form of ledger or cash book or accounts books. Even if you are just keeping the books as a printout of data and you have just stored that printout of data in any floppy or disk or tape or pen drive or any such other magnetic device, it will be deemed to be the books of accounts in terms of section 2 of the Income Tax Act. Now the next very important definition or terminology is the definition of person. This is a very important definition, and you will find invariably this particular definition, this particular term is being used in the Income Tax Act. The term person has been defined under subsection 31 of section 2. Please mind that the word person includes what? It includes number 1, individual; number 2, HUF, Hindu undivided family; number 3, a company; number 4, a firm; then number 5, an association of persons, AOP, or body of individuals, BOI, whether incorporated or not. Next, a local authority, a local authority, and every artificial judicial person. Means all these 7 category of persons are included in this definition of persons which has been given under section 2 of the Income Tax Act. I would like to say that the definition of person is inclusive but not exhaustive. It means anything which is not covered under it still be covered within the 4 walls of its definition. Now, what is more important to be seen under the definition of person is that you please take note of these considerations. What exactly is the definition of person? For example, individual. Individual means a natural person, a human being. It includes even minors and individual of unsound mind. It means even minor. Minor means a person who is not even capable of making a contract. He is also covered under the definition of individual and under the definition of person. And the individual of unsound mind, a person who is not of sound mind, he is a lunatic, is also covered under the definition of the person. Second is Hindu undivided family, HUF. The HUF has not been defined in the Income Tax Act. Please mind it that the definition, the word Hindu undivided family, it has not been defined under the Income Tax Act. However, HUF is not created by the law. It is not created by the law like a company. Rather, its membership arises from the birth, and the head of the family is called the Karta. The HUF consists of all males members who are lineally descended from a common ancestor, and it also includes their wives, unmarried daughters, and daughters-in-law. So that is all there in the undivided family, HUF. The next term which is being used in the definition of person is the association of persons and the body of individuals. They have been defined in the Act. Under the common understanding, they have not been defined, they have not been defined under the Income Tax Act. However, under the common understanding, when there is a combination of persons, when the persons they come together, they just combine together, and they just combine together for the purpose of formation of some joint enterprise, then it is called the association of persons. It means they are not going to form the partnership. Other than the partnership, if they just come together for the purpose of joint enterprise, then it will be called your association of persons. But the body of individual that would be more or less have the same meaning, but there are only individuals. It means in the body of individuals, only individuals are taken. And these individuals, they come together to carry on some activity with the object of earning income. It means ultimately their objective is to earn their income. So both these definitions with association of persons and the body of individuals, they are also very, very important to be remembered under the Income Tax Act 1961. Now the next terminology is local authority. Local authority means a municipality. It may be district board, a gram panchayat, municipal corporation, or any other body which has the control and management of funds of government. It means all these bodies, all these entities are covered under the local authority. It means municipality or gram panchayat, municipal corporation, or another body which has some control and the management of the funds of the government. Government may be a state government or it may be central government. The next important person which is included under the definition of person is artificial juridical bodies. What are those artificial juridical bodies? The last category of person is called the residual category. They come under the residual category, and they include all sort of artificial juridical bodies. It is they are just above, because we have got 6 category of people, 6 category of persons. This is the last category, that's why it's called the residual category, and it covers not only the Hindu deities but includes all other artificial persons with juridical personalities. It means they may be including your universities, for example Delhi University or Punjab University. They will come under the artificial juridical bodies. So we just try to understand the meaning of a person by taking the following example. Before that, I just want to conclude with this note that I can conclude that there are 7 persons chargeable to tax under the Act, and the definition as given above is inclusive. Please, I just reiterate one again. The definition of person as given by the Act is just inclusive, but it is not exhaustive. So therefore, any person not falling in the above mentioned categories may still fall in the 4 corners of the term person, and accordingly may be liable to tax under section 4 of the Income Tax Act. So you please remember it and mind it that the definition of person as given under the Income Tax Act is just inclusive and not exhaustive. So we'll just try to understand. We'll just try to understand the definition of person by understanding some of the examples. For example, Mr. Vipul will be regarded as an individual. So if Mr. Vipul is there, we can say yes, he is an individual. He is a person under the category individual. ABC Limited shall be regarded as a company. Joint family of Mr. A, Mrs. A, their one son Sonu, one daughter Megha shall be regarded as HUF or Hindu undivided family. I just want to give you what exactly is covered under HUF. What do you mean by company? What do you mean by individual? I mean, these are sort of the terms which you can use. If you are using the word of any individual, it means he will be individual. He may be a male member or a female member, then it will be treated as individual. So ABC Limited, that's a company. For example, joint family of Mr. A, Mrs. A, their son, their daughter, or if there be any other person, if suppose they have got another daughter also, then they will be forming the HUF. The 4th category is the Vikrant Cooperative Societies. This is the name of some society, and similarly you may find the name of some other society also. Vikrant Cooperative Group Housing Society or Similar Society shall be regarded as the Association of Persons, AOP. The Bar Council of Court shall be regarded as Association of Persons, same. Similarly, the next example is New Delhi Municipal Corporation or the Municipal Corporation of Delhi will be regarded as a local authorities, and I just I told you earlier also, Delhi University, Punjab University will be the good examples of artificial juridical persons. So these are some of the examples by which I have made an endeavor to make you clear about the definition of the term person. Now, our next terminology is the meaning of relative, which is given under subsection 41 of section 2. The term relative means husband, wife, brother, or sister, or any lineal ascendant or descendant of the individual. It means all these persons, they are covered under the meaning of term relative.